Welcome back, my friends. Thank you so much for tuning in. This is Silver Slayer, so now let's talk silver. Oxford Economics just came out and said something huge, very telling. They said it is critical to have at least 4 to 6% of your portfolio invested into silver, as it will be optimal over the next 5 years. Even people that don't stack silver are now starting to see that it makes the most sense. It's the best investment. I knew this day would come sooner or later, and it's looking like people are now realizing silver is a ticking time bomb, and you better get into it before it's too late. I really like this article because they break down a lot of stuff. A lot. I mean, they talk about the psychological aspect, they go into oversold territory, they go into even, not just the monetary side of things, but supply and demand as well. Seems like they get the whole picture. Seems like they get the whole picture and even go into gold later on. So you can see why this video is so important to watch all the way through, because we have a lot to break down. I really hope you enjoyed this video. Make sure you subscribe. I post daily videos every single day. If you want a direct source with the most trusted bullion dealer, the bottom left hand corner, send an email to that address. You will be put on. That is Miles Franklin, one of the only few authorized dealers with the U.S. Mint. Just send an email. They'll match any other dealer if they have a lower price, which I highly doubt it, but you can't find a better price anywhere else. Plus, that's a direct source that can fill $50 million orders. Nobody else can do that. That's very beneficial in the coming times, as all these sites and all these dealers are running low. So anyways, let's do this. Improving sentiment in the marketplace is driving the silver market to a 6-week high, with prices seeing a solid break above the critical psychological level at $20 an ounce. What do they mean by that psychological level? Well, you ever see something at the store priced $19.99 instead of $20.05? It just looks cheaper, right? Even 1 penny can make a difference. There is a lot of, desensitization at 19 compared to 20. Even we could even go into 30, and I mean that flipping the script. A lot of people invested into silver during the Wall Street silver hype train at $30. So they're desensitized at $30 because that's what they bought at. So now they see it at 19 and they're like, silver's down. And did you know that the average price of silver over the last decade has been $15? So someone like me who's been stacking for 7 years, $19 is still pretty high compared to what we've been buying at. So you could see how people are desensitized to different prices. $20 definitely looks a lot better than $19, and that is a psychological level. So is $50, and that's also a huge resistance level. Now, not only is silver supported by solid fundamentals, but analysts note that precious metals seeing strong technical momentum after spending most of the summer in oversold territory. So December silver prices last traded at $20.48 an ounce. That's up 7.57% on the day. The precious metal is seeing its best percentage gain since mid-August 2020. Silver is significantly outperforming gold, which is testing resistance at $1,700 an ounce, and it's up 1.38% on the day. See, silver's rally comes a few days after Oxford Economics touted the precious metals role as an essential asset in an investment portfolio. The economic research firm conducted the study on behalf of the Silver Institute. According to the analyst, silver should be regarded as a distinct asset class and investors would benefit from an allocation between 4 and 6%. Then the analyst said, and I quote, "This is considerably higher than most institutional investment portfolios, where exposures to silver generally amount to no more than 0.2% and are mainly achieved indirectly through commodity indices." And yes, that's how you pronounce that word. See, the analyst noted that most investors view gold and silver as similar monetary metals, safe haven assets. However, Oxford Economics said there are some important differences between the two precious metals. And yes, there are huge game-changing differences. My name is Silver Slayer, not Gold Slayer, for a reason. The biggest difference between silver and gold is industrial demand, right? Gold is a monetary metal it's used for jewelry, coins, and bars, and stuff like that. Just kind of sits around. Silver is the exact opposite. Silver is used in everything technologically that we're advancing in. 5G towers, electric vehicles, solar panels, all that stuff requires boatloads of silver, not so much gold. See, that is where silver differentiates. When we're expanding in the Green New Deal and expanding in this new digital era, silver is going to be needed everywhere and anywhere. We don't have enough of it. That's not the case with gold. See, silver has much more potential. The report noted that roughly half of silver demand comes from industrial applications. The analysts noted that structural demand for silver remains positive, benefiting the long-term growth in various green energy applications, electric vehicles, and energy storage, as well as 5G devices and networks. Silver encompasses the investment attributes of a precious metal while simultaneously boasting a wide array of active industrial applications. And that's, I call it the best of both worlds, right? It's a win-win situation, whether the economy is in good or bad shape. I mean, it's literally the perfect investment. Nothing else makes as much sense. And that's why you see even someone like Oxford Economics that has no place in precious metals, specifically, even coming out and saying, yo, this thing got something going for it. So anyways, while silver's price movements are closely correlated with gold, our analyst indicates that its return characteristics are sufficiently different to make it a valuable diversification tool that warrants its own portfolio commitment. And yes, I think that silver is going to take on a life of its own, and as they mentioned, it's starting to. This is just the beginning. We're just now getting into the Green New Deal. The silver shortage is really just starting to have some type of impact, right? I mean, I've been talking about it for years, but it's leading up to it. It still isn't even really here. Over the next 5 to 10 years is when the silver shortage is going to have a very strong pull on the price. Right now, they could still sweep it under the rug to some degree. Now we're starting to see the investment sector running out of silver everywhere. Then we're going to see the industrial sector, right? Not enough for all these EVs. Might have to put a halt or slow down the production rate, or slow down the production rate of solar panels. Yada yada yada. That's when things are really going to get to get, I guess, noteworthy for these big tech companies to say, yo, we need a lot of silver and there's not much of it, and that's when silver's true price will shine. Similar to gold, the analysts also noted that silver has a relatively low correlation with developed markets, making it a valuable diversification tool. The price of silver has risen during 4 of the 8 stock market corrections experienced over the past 20 years, while its price fell by less than equities during the other 4 episodes. Although silver underperforms gold as a safe haven, it can still help to reduce losses in times of market stress. That's what I was just saying. It's the best of both worlds, whether the economy is in good or bad shape. Gold only benefits when things are going bad. Silver, even if things are going good, the economy's booming, right? Technology, all these uses for silver, it had both of its characteristics, whether it's a monetary metal that kind of supports it as a safe haven, or the industrial side, which would actually help if the economy's booming, silver can perform well. The gold to silver ratio, and actually let me stop right there. It's funny because silver say, or people say that silver is actually the riskier metal, but silver's the one that performs well regardless of what's happening in the economy. They say that because it's more volatile, and that's because it's a smaller market. But to say a safe haven metal is risky, that's contradicting, right? Those two words cannot sit in the same sentence. A safe haven asset is risky. Makes no sense. I call silver gold on steroids. The gold to silver ratio has been in a steady uptrend for the past decade, as silver struggled to outperform gold in uncertain economic conditions. However, Oxford Economics said that they expect the trend to reverse in the next few years as normalcy returns to financial markets. We believe the price of gold will also come under pressure in the near term as safe haven flow, fallback, and uncertainty subsides. Although movements in the price of silver are likely to remain correlated with gold, the silver price should be somewhat insulated from the market correction given that it has not been inflated to the same extent as gold. Silver will also benefit from strengthening industrial demand. Oxford Economics Baseline expects the global economy to avoid a severe downturn, with global GDP averaging about 2.7% for the next 5 years. Economists see inflation peaking in 2022 and the disinflation trend of the last decade resuming. Now, that's all speculation. I don't like to go off speculation because, regardless, them saying this means nothing because why try to assume what's going to happen if we don't know, because we are investing off of what we do know. We do know that silver is scarce. We do know that the dollar is collapsing. We do know the dollar's lost 98% of its purchasing power. We do know that silver's been valuable for 5,000 years and always will be. We do know we need silver heavily industrially, and as we advance in the Green New Deal, proving that we're headed in a new digital age, silver's needed for a lot. To try to speculate what the GDP average is going to be on all that, it's irrelevant. We just got to invest in what we know right now, and silver always makes the most sense. When you're investing in the stocks and things that are pegged to the dollar, you're playing with fire, because all of that inevitably does crash. Every fiat-based system lasts around 100 years before it falls. That's because it's designed to fail. Ever since we got rid of the gold standard, we signed away our death warrant. How could a system work that's with a dollar that's not backed by anything? Especially when we're throwing trillions out. We're $30 trillion in debt, throwing trillions out in stimulus and trillions this way and that way. I mean, that's not possible. It is going to collapse. The dollar's lost 98% of its original purchasing power. That's a literal number, not 97%, not 99, 98% right now. What's going to happen when that percentage hits 100? The only thing that is valuable and holds its value is silver. And when the dollar collapses, stocks are going to go with it. Anything pegged to the dollar is going to go with it. So you better put your money into something that holds its value, right? When you put a $20 bill in an ounce of silver, the value of that coin, that ounce, isn't the price tag, isn't spot price. It's the 1 ounce inside of it. Because no matter who says that 1 ounce coin is worth what is irrelevant, because the coin's value is the 1 ounce inside of it, not the price tag. And once you understand that, you're a true silver stacker. Once you learn to take away the dollar's value, the dollar's terms, because you can't compare fake money to real money. It just doesn't make sense. But anyways, I'm going to wrap this video up here. Let me know what you thought about this article. Make sure that you like the video. Make sure you subscribe. Remember, if you want a direct source to the most trusted company, send an email to the bottom left-hand corner, info@milesfranklin.com. Let them know Silver Slayer sent you. Andy would love to hear it. It helps me out. Probably helped you out because they know that you're one of my viewers. Just a little more respect on the name instead of just some random person. It definitely kind of it might help you out, but it definitely helps me out as well. They're really excited because I started working with them recently, and they like that I'm bringing clients over, and it's not even about me. It's really about you building a business relationship with a trusted dealer, because in the coming times, as local coin shops are already basically sold out, you see, I just made a video yesterday, all these dealers now and all these sites are trying to buy people's silver back because they don't have any, and they're willing to pay massive premiums, the highest premiums ever. These dealers are willing to pay because they need it. Regardless, they're like, even if we have to pay a 75% premium, I'll take it because we don't have it at all. So producers turn into consumers, the consumers turn into producers, right? We have the silver, they want it, so we could set the price, and they're willing to pay the price. So, building a relationship with a company like Miles Franklin that can still fill $50 million orders, which he got the other day, another $50 million order he got. And he could fill it. All these other sites, they would be screwed. They wouldn't be able to accept that order. And he still can because he's one of the top dogs and he has connections. that goes way deeper than anyone else in the game. Highly recommend that you build a relationship with him. It can go a long way. I'm going to wrap this video up here. Make sure you subscribe. We are on the road to 100K. I love you all. Thanks for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.